Have you ever asked yourself, how many stocks should I really own in my portfolio to ensure success? If so, you're not alone. Many investors, from beginners to seasoned professionals, grapple with the idea of diversification and how many stocks are enough to build a stable and profitable portfolio. Some experts swear by broad diversification, while others, like the legendary Warren Buffett, advocate for a more concentrated approach. In this video, we will break down the debate, share Buffett's unique perspective, and help you determine the right balance for your portfolio. Stick around. You won't want to miss the key takeaways. Number 1. The debate: broad diversification versus concentrated investments. There's a long-standing debate in the world of investing. Is it better to own many stocks or focus on just a few? On one side, many financial advisors and Wall Street professionals argue that broad diversification reduces risk and helps maximize returns. On the other hand, Warren Buffett, one of the most successful investors of all time, claims that diversification is often overemphasized and can even dilute your profits. According to Buffett, investors who are knowledgeable and experienced in analyzing businesses don't need to spread their investments too thin. He once famously said, "Diversification is protection against ignorance." If you know how to pick quality businesses, it's crazy to own 30 or 40 stocks. So what's the right approach? Should you follow the advice of Wall Street or listen to Buffett? Number 2. Warren Buffett's view on diversification. Buffett's opinion on diversification is straightforward. Owning too many stocks can be counterproductive. He believes that if you thoroughly understand the companies you invest in, there's no need to own 30 or more stocks. In fact, he often advises investors to focus on just a handful of high-quality companies. Buffett's portfolio strategy has evolved over the years, but the core principle has remained the same: concentration. In the 1960s, when Buffett was managing the Buffett Partnership, he typically held 5 to 10 stocks, with a few key positions accounting for a significant portion of his portfolio. These stocks, which he referred to as generals, were undervalued businesses with strong potential for growth. In addition to his generals, Buffett also held smaller positions in other stocks and what he called workouts, companies whose value depended on special situations like mergers or restructuring. At any given time, Buffett's portfolio contained around 30 stocks, but the bulk of his investments were concentrated in just a few high-conviction picks. Number 3. Buffett's investment strategy today. Fast forward to today, and Buffett still adheres to his concentrated investment approach. Through his holding company, Berkshire Hathaway, Buffett now manages a portfolio worth over $331 billion. While Berkshire's portfolio consists of 41 companies, the top 5 positions account for over 76% of its total value. If you include the top 10 positions, that number jumps to nearly 92%. Despite the large number of companies in his portfolio, Buffett is heavily invested in a select few. This strategy reflects his belief that focusing on your best ideas is the key to long-term success. Buffett has even stated that he would prefer an even more concentrated portfolio if it were feasible. However, due to the sheer size of Berkshire's assets, it's difficult to allocate such a large amount of capital to just a few companies. For example, investing $250 billion into a single stock would likely result in owning a majority of the company, which is not always practical. Number 4. The case for diversification. Now that we've covered Buffett's perspective, let's explore the other side of the debate: diversification. Diversification is the practice of spreading your investments across various assets to reduce risk. By owning a variety of stocks in different industries and sectors, you can protect your portfolio from the volatility of any single investment. Number 5. Finding the right balance. So how many stocks should you own? The answer depends on your investment strategy, risk tolerance, and the time you're willing to dedicate to research. If you're confident in your ability to analyze and pick winning companies, A more concentrated portfolio like Buffett's may be a better fit. However, if you prefer a more hands-off approach or want to reduce risk, diversification could offer more security. Number 6. Practical steps for stock selection. Once you've determined the right strategy for you, it's time to start selecting stocks. Here's a practical approach. 1. Filter your options. Begin by creating a list of companies that interest you. Filter them based on key financial metrics such as price-to-earnings ratio, return on equity, and sales growth. Also, consider qualitative factors like market position, management, and competitive advantage. 2. Conduct a detailed analysis. Dive deep into the company's financial statements, including the balance sheet, income statement, and cash flow statement. Look for strong revenue growth, manageable debt levels, and healthy profit margins. Consider any upcoming risks, such as changes in industry regulations or potential market disruptions. Number 7. The importance of rebalancing your portfolio. While selecting the right stocks is crucial, an often overlooked factor in successful investing is the need to regularly rebalance your portfolio. Rebalancing is the process of adjusting your investments to maintain the desired asset allocation as market conditions change. Over time, certain stocks or sectors may outperform others, causing your portfolio to drift from its original allocation. This imbalance can expose you to risks you hadn't initially planned for. Rebalancing ensures that you stick to your investment strategy and don't become overly reliant on a few successful stocks. For instance, if one of your stocks performs exceptionally well, it may grow to represent a much larger portion of your portfolio than you initially intended. This could expose you to unnecessary risk. By selling a portion of your high-performing stocks and redistributing the proceeds into other areas of your portfolio, you can manage risk more effectively. The key is to review your portfolio periodically, perhaps quarterly or annually, and make adjustments as necessary. Rebalancing doesn't necessarily mean frequent trading, but staying true to your investment goals over the long term. There is no one-size-fits-all answer to how many stocks you should own. The key is finding a strategy that aligns with your risk tolerance, time commitment, and financial goals. Warren Buffett's concentrated approach has been incredibly successful for him, but it requires a deep understanding of the businesses he invests in. On the other hand, broad diversification can provide more security but might limit your upside potential. Remember, investing is not a game of chance. It requires careful analysis, discipline, and a clear strategy. So, how many stocks are in your portfolio and why? Let us know in the comments. If you found this video helpful, sure to like, subscribe, and hit the notification bell so you don't miss any of our future content. Thanks for watching. See you in the next video.